with the mortgage calculator. Today we're going to be pulling up some live mortgage rates, and then we're going to do a deep dive into no seasoning cash out loans. So definitely a great topic, something that we always have some questions about and working with some scenarios. We'll wait just a moment here to get started. Let us go live on all the different platforms. Thank you everybody for tuning in on all the different platforms here. We do stream this live on YouTube, Facebook, LinkedIn, Spotify, Apple Music, and anywhere you can get a podcast. So we'll wait a moment here. Appreciate everybody tuning in nice and early. We put the chat up on the screen, so feel free to drop a comment there as you tune in the chat. All right, see some comments coming in. Appreciate it. We'll get started in just a moment here. All right, it looks like we are live on all the different platforms. We'll go ahead and get started. Keep dropping comments there in the chat as you tune in, and we can also answer any questions. You can drop any questions you have in the chat as well. So welcome everyone. My name is Kyle Hershey. I'm the CEO calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. What we do on this show every morning at 11 a.m. Eastern time is go through some live mortgage rates, and then we do a deep dive into a different topic. And today's topic is no seasoning cash out loans. So this is something that comes up a lot, especially with us specializing in investment, working with investors. This is something that comes up a lot. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive into no seasoning cash out loans. But before we do that, we'll go through what we do every morning, which is pull up the live rates for a few different programs and check out what the market is looking like. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are doing this morning.
All right, switch my screen and we will get started. Definitely had a lot of downward momentum recently. Today's news wasn't that great, but overall the rates have definitely improved. So this is our pricing tool that we'll be using here for our team of mortgage professionals. This will show us the general rates and the APR for today, December 8th, just after 11 a.m. Eastern. So all the general programs are live. And if you'd like a full breakdown of all the itemized fees that go into the APR here, please get with one of our team members. We have over 400 licensed loan officers in 24 states. In order to compare the programs here, we'll set up the same scenario, and that way we can compare APRs across the programs. So for all the demos, we'll set up a loan amount of $400,000. We'll set an LTV of 80% loan, 20% down payment. We'll set a desired search parameters to find the lowest rate possible for our conforming conventional programs first. Then we'll check out our FHA options. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. And USDA is only for eligible properties. If you do happen to be looking, just let us know. We can quote those, no problem. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, standard loan, primary occupancy, single-family home, 1 unit, state of Florida, Miami-Dade. For all the demos, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with all these basic settings, let's check out the conventional options this morning. All right, not much change since yesterday. Right about the same here, 6.375, 2.5 discount points and cost for that rate. And that puts the final APR at 6.672. So definitely much lower than just a few weeks ago. We were almost approaching the 8s. Definitely love that the rates are going down here, and great news for all our customers out there shopping. Now, if there's any reason our customer doesn't qualify for a conventional conforming program here, typically the next option we want to compare, we'll set up the same exact scenario, and this time we'll check out our FHA options. FHA allows more leniency on credit issues, as well as a much higher debt-to-income ratio. However, we'll keep everything exactly the same so we can compare apples to apples here across the programs. and compare the APRs here. So today for FHA, best option 5.625 rate, 2.375 discount points in cost, puts the final APR at 6.558. So just a touch under conventional there on the APR. So our customer that qualifies for both, definitely check out FHA. This does include the upfront and yearly mortgage insurance in that APR. So it's definitely a good thing to consider with all the costs there included. Now, where we love to specialize is if our customer doesn't qualify for FHA or conventional for any other banks or lenders would have to deny that customer, but we have over 5,000 other options here under expanded guidelines. So everything else will stay the same here, but now we have a new option pop up for income. We can select new income with our non-QM programs. So full doc is 2 years of tax returns. That's what we use for FHA and conventional. So if our customer doesn't qualify using 2 years of tax returns, we would use one of these alternatives. We have asset related, business bank statement. The investor programs are just for investment properties. We'll talk about that in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular program. We also have RSU, stated income, VOE programs, 1099 programs, P&L programs, no income, CDFI programs, all kinds of different variations here. The most popular option is the 12-month personal bank statement. And that's for our self-employed borrowers. Many times when our self-employed borrowers submit their tax returns, might have various write-offs and may not quite get the income they need to get the house they want. So we'll solve that problem. No tax returns at all, just 12 bank statements here for the income. And we'll use those 12 bank statements to calculate a debt to income ratio of 40% in this example here, using just the cash in the bank, no tax returns at all. So with these methods, our borrowers qualify for more income and can therefore get that home they really want. So let's check the bank statement programs today. All right. Best option here, it's about the same as it was before, 7.625 rate, 2.25 discount points in cost there. Puts the final APR at just a touch over 8. Remember the conventional options are just a touch under 7. So this is typical. Non-QM was beating conventional for a little while there when rates were crazy. Now it's a little more typical. The bank statement options cost about 1 point more in cost here in order for our customers to use a whole new method of income and qualifying for a home that they would not otherwise be able to get. And there's dozens, if not hundreds of variations here. If we scroll down, some of these at higher rates and costs may allow bankruptcies, foreclosures, other credit issues that would otherwise cause our customers to not qualify. And some of these specialty programs may allow us to use different formulas to calculate the income, etc. So hundreds of options here. Please get with our team. They will dig through and find the best ones. And before we go into our refi examples, all these are purchases, of course, we want to do our investment property examples as we do every morning. So we'll set up the same scenario here, 80% loan to value, 20% down payment. And we'll search for the lowest rates we can offer for conventional investments and our non-QM expanded guideline investments. The government options, FHA, VA, and USDA, do not work for investments, so just these top two here. We'll start with conforming conventional. Everything is going to stay the same. All we've changed here is occupancy to investment. So let's check out the options here. I think that's actually a touch lower than it was yesterday. 6.99 rate, 3.5 discount points in cost, but the final APR 7.409. I believe that's a touch lower than it was on yesterday's show. And great change there. Conventional investments was a little bit crazy on the pricing for quite a while. Now it's definitely reasonable for our customers that qualify. However, most customers definitely recommend to compare a non-QM option. So for our final demo, let's pull up a comparison here for investment property, same scenario. And we'll find the best options for our expanded guideline, non-QM for investments. So the first thing we need to pick here is the income type. The most popular income type for program here is the DSCR option. That's because it doesn't actually require any income or employment or documentation for that from our borrower. Simply use the estimated rental income from the property to determine a DSCR value. If the estimated rents can cover the PITAA, the mortgage expenses, and insurance taxes association, aka the property cash flows, that's a ratio of 1 or higher. We also have options for under 1. For the demo, we always put 1.5 as the highest value so we can see all the programs. And finally, prepayment penalty must be selected. We will use 3 years. That is standard for the demo here. We can select 0, that will cost more and limit the programs that show up. We could also select 5, which will save money in some cases, but not all programs allow it. 3 years is the most common, so we can see all the options pop up. And let's check out the DSCR rates today. Wow, going down. Beautiful. Best DSCR option here, 7.375 rate, 3.125 discount points and costs, puts the final APR at 7.876 here. So just a touch higher than conventional. We were beating conventional, which was absolutely amazing. Now we're within about 0.3, I believe, from today's show. I'd still say about 99% of investors will use a DSCR option here if we're anywhere near conventional. So definitely look out for these options. Tons of flexibility, 1, 2, 5, 10 loans at a time, no employment, no income needed from the borrower. And as we scroll down here, some of these options at higher rates and costs may allow bankruptcies, foreclosures, other credit issues. Some of these may allow different ways to calculate the income. And to segue into Jose's example, very popular request, some of these programs, not all, obviously, allow for no seasoning finance. So let me switch my screen today. That is going to be our topic. No seasoning cash out loans. So this is a particularly common request for investors. So it's a common feature that we always look to have for our DSCR programs. As I mentioned, not all of them will allow, but that's why we have our deep dive with Jose today to show the programs that do allow it. So first, I guess, Jose, let's talk about seasoning and what we're talking about for cash out determination of value, right? So if you're looking at the guidelines, you're wondering what we're talking about here of no seasoning. Seasoning, as it relates to cash out, is typically under the guideline called cash out determination of value. So that's what we're talking about here. So Jose, hopefully that sets you up and we can get started.
Absolutely. So, seasoning, and we're not talking about salt and pepper now, is very important, especially on cash outs. Believe in our seminars we had last week, we were advised, I think, that Fannie, Freddie just increased their seasoning on cash outs, I believe, to 12 months, right? So now, keep that makes non-QM even more advantageous here, right? Because we have options with no seasoning, like the ones that we're going to discuss today. We have options with 3 months seasoning, and then the more common 6 months, and then obviously 12 months. So seasoning on title is how long the current owner has been on title in order to be able to use the market value instead of the recent purchase price plus improvements, right? So definitely big difference if you're looking at that situation. And also note that I'm also going to show you guys, even though it's not a cash out, we also have to worry about seasoning and non-QM on purchases as well, because we have to be aware of how long on the non-QM loans the seller has been on title, because that is going to affect if you're going to have to order a second appraisal, or in some cases they may not just accept the second appraisal, they may just set the value at purchase price plus improvements. So keep an eye on that. Seasoning, very important in the non-QM world. So I'm going to go over some options here for you. Our highest LTV option is our 80% option. Now keep in mind,
Can you
this,
zoom in a touch?
oh yeah, sure.
Jose?
This is a borrower paid option, which means that you don't see any loan discount points here, but the lender comp is paid by the borrower. Um, or else the rate would be a little bit higher. So I say that because you're going to see this rate here, 9.374 with no loan discount. Then you're going to see the next rate in our lender products where the comp is already built into the rate. You'll see a little bit of a different cost structure. So here it would be 2.75 is the borrower paid fee on this deal. Still amazing deal because this is the unicorn, right? Everybody's looking for that 80% cash out on a DSCR property, and this would be it. So we have some other options here, 75%, right? And we're looking at 8.875 as our lowest cost option. Gets pretty good here. And 7.75 lowest rate option. And now 70%, we are looking at 8.625, so drops a little bit there. 7.625 lowest rate option. 65%, we're looking at 8.625 again, 0.625 and 7.625. And now we're going to look at some 2 to 4 unit, as we love our house hackers out there. And good news is no adjustment for property type 1 to 4 units. And our last option here is our purchase option, taking it up to 80%. So we do get a little bit of a difference when we take this option up to 80%, but still very good options, 9.5%, and you can go down all the way to 8.25%. And I would state seasoning on title is one of the items that tends to catch loans by surprise, because we think about checking credit, we think about all the property's cash flow, all these items, but we tend to forget sometimes about how long has the current owner been on title, whether it's a refinance or whether it's a purchase. Big difference, and there are not that many options out there that offer no seasoning cash out refis. In this particular case, as long as you are on title today, you can enter into a loan application tomorrow. So you bought the property yesterday, got on title. Today you can do a loan application, and if you got such a great deal and the property appraises for $100,000 more than what you bought it for, that is the value we're going to use. Now, this program is especially attractive for our fix and flippers out there when they want to keep the property instead of sell the property. Maybe they were able to rehab the property in 60 days and they don't want to wait 6 months or 12 months to be able to do a cash out refi. And in some cases, that flip loan may only be good for 6 months. So if they had to wait 6 months to be able to refi, they would be in default of their agreement and they would have a hard time being able to refinance out of that loan, and they may have to sell it. So this is a great tool to combine with your fix hold strategy. You have the fix loan, the fix flip loan to rehab, and then you have this product to refinance you out of the rehab easily, quickly, DSCR, and no seasoning.
Okay. I don't see any questions in here. All right. No questions. All right. Well, let's go ahead and wrap it up here. Remember, we do this 11 a.m. Eastern every weekday. So we'll be back here on Monday with some new topics. Appreciate everybody tuning in. Thank you, Jose. Great presentation. And we'll see everybody Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great weekend, everyone.
Thanks, everybody.